Hello everyone. This photo was taken a little while ago when we were on holiday or vacation. Thanks again for purchasing my work. I hope you enjoy this lesson and go find a nice relaxing place and put on your headphones so we can check the relationship between the books we're doing, Calibu Education, and we have a supplier, a creditor, or accounts payable we're going to buy from the computer store on credit, and we're going to look at all the transactions that go into the creditor's journal, and we're going to take that information and we're going to put it into the general ledger. So enjoy this lesson. I'm trying to make it a little bit more interesting and fun, so you might see some random photos along the way. Enjoy the lesson. There's some nice scenery. I went on a cycle. I hope you guys are exercising, and that was part of the route that we went on. As per normal, I'm going to show you how the lesson fits into the bookkeeping cycle. I'm going to look at some credit transactions, credit purchases. We're going to look at the document that records credit purchases, and today we're going to do the creditor's journal, and from the creditor's journal we're going to take the transactions and post them to the general ledger. So typical transactions: purchase stock on credit. Our supplier with whom we have an account is the computer store. Yeah, we received a discount, and before the trade discount the amount of the purchase was 79,000. So that's a typical credit purchases. What credit means is we're going to receive the stock now and pay later. So we've bought the stock on credit. There's another transaction. We're going to purchase a printer from the computer store. We receive their invoice. We're going to use their invoice, which is the original copy, and we're going to record the transaction in our creditor's journal. We purchase tablets to work from. We're going to do a few calculations there. Then, like I said, it's recorded on a credit invoice, and on the invoice must be the terms and conditions of how Calibu Education is going to pay the computer store. So here it says, it's very small, but I'm going to go through the document a little bit later. If we pay within 30 days, we get a 5% discount. So we'll have a look at the terms and conditions as we move along in the video. From the document, we use the credit invoice original. We record the information in the creditor's journal. We're obviously going to go through the creditor's journal and all the transactions. And then from the creditor's journal, we take the information to the accounts in the general ledger. So that's what we're going to do today, the creditor's journal. We're going to have a look at the document that is used to record credit purchases, the creditor's journal, and we're going to take the information to the general ledger. Maybe I'll have a look at the account of the computer store, our supplier, in the Creditors Ledger just to show you what the account looks like in the Creditors Ledger in accounts payable. So let's get going. If you've seen some of my other videos on the cash book receipts, the cash book payments, the petty cash journal, you will know that these are the transactions for Calibu Education for the month of February. All the amounts include VAT unless otherwise stated. But what we're doing in this lesson is the Creditors Journal. So I've identified the transactions that relate to the creditor. I'm looking at all the credit purchases of items from the computer store, our only creditor in this example. So on the 6th, we purchased stock on credit, buy now, pay later. We received a 5% discount on the bulk purchase. Before the trade discount, the invoice from the computer store amounted to $79,000. So we've bought stock that we're going to sell, and the stock cost us $79,000. The stock includes VAT, but we haven't taken off the 5% trade discount. We're going to have to do that, and I will show you how to do that when we post this information to the Creditors Journal. The document that we received was, already, the invoice that the computer store generated, and they sent us the original. So we received the original invoice from the computer store, and we're going to use that document to record this transaction in the Creditors Journal. So let's move on. There were more transactions for the month of February. Calibu had a busy February, Calibu Education. On the 18th, Calibu Education purchased on credit a new printer from the computer store. We received their invoice. We need to record this transaction. So there's another transaction on the 18th. On the 20th, we purchased 4 tablets on credit from the computer store. 3, this is interesting, 3 were for resale. So what do? We buy and sell. And 1 was for office use. So the 1 tablet we're going to keep in the office, and the other 3 we're going to sell. We received their invoice for $4,400. So we will have to see how we're going to categorize these tablets that were bought. I'll tell you now quickly. I'll give you a heads up. 1 was for office use, so that will be equipment, and 3 were for resale, and that will be stock. So we're going to have to see what was paid for stock, and the 1 tablet was equipment. So we've looked at the transaction on the 18th and the 20th, credit purchases from the computer store. Now this popped up here on the right hand side. On the 23rd, bought a smart screen TV from the computer store for presentations, 10,520. A 2,000 Rand deposit was paid. The balance was bought on account. So a smart screen TV was purchased for 10,520. 2,000 was paid as a deposit, and that means the balance of 8,520, that amount is on account. If you watch the video on the cash book payments, the 2,000 has already been recorded because that payment was made. The balance now is going to be on account, so that needs to go into the creditors journal. So we're going to look at that transaction as well. I've had a look on this slide, and there's nothing that relates to the creditors journal. I've worked through all these transactions. They go into the cash book payments, the cash book receipts, the cash book payments. So what we need to do is we need to move on to doing the creditors journal. We need to check out the documents that are used to record the creditors journal. So boy, how's it going there?
All good, yeah?
That's great to hear. It's a bit of an up and down time on the seesaw there. Remember I said I would just throw in the Creditors Ledger of Calibu Education. So I thought I would demonstrate this. But here are the transactions which relate to the computer store. There you can see the computer store, the computer store. Now remember, the computer store is our supplier. We purchase from them on credit. What journal are we looking at? The creditors journal. We are only recording credit purchases from the computer store. And I did point out that would be the 6th, the 18th, the 20th, and then there was also, I think, the 23rd. Yes. So there were 4 transactions where we're making a purchase on credit from the computer store. All these other transactions involve the computer store, but they are transactions where we paid the computer store, we returned items to the computer store. But for this lesson, we're only looking at those transactions which go into the creditors journal. And if all the transactions were posted to the computer store's account, in the creditors ledger, let me show you. This is the creditors ledger of Calibu Education. We're doing the books for Calibu Education, and in the creditors ledger are the creditors accounts, and we're only doing the computer store, and we're looking at those items which result, those transactions that result in Calibu Education us owing the computer store more. So there's another one and another one. I just showed you this because this will help you with the bigger picture. I'm showing you all the transactions that relate to the computer store, but in this lesson we're only doing the credit purchases. So let's move on. This here is the invoice, or an example of an invoice that we've received from the computer store. So it's a credit tax invoice. It could say credit invoice, and the reason we know it's a credit invoice is because there are terms and conditions with regard to this invoice. The computer shop issued an original, this document, to Calibu Education, because Calibu Education in this case here purchased a laptop, and there's the price including VAT. There is the VAT registration number of the computer shop. So we, Calibu Education, can claim from SARS input VAT because we're dealing with a VAT vendor, the computer shop, and we're a VAT vendor ourselves. So this is an example of an invoice, the document that records a credit purchases. Calibu Education purchased a laptop from the computer store. So that's what's going on here. Now what I'm going to do just quickly is maybe just refresh your memories. I'll run through all the different items that are recorded on this document and what makes it a valid tax invoice. So we're looking at the requirements of revenue services for a valid tax invoice. This is a bit of revision on source documents. There needs to be the details of the buyer, the name, address, and VAT registration number. It's there. The words must say tax invoice. The document must be headed tax invoice. I can say credit invoice. The details of the seller, that's our supplier, the computer shop, all needs to be there with the VAT registration number. There must be a document number, the date the transaction took place, the number, the quantity of items being sold. All these details need to be on the document to make it a valid tax invoice. A description of the items being sold, the unit price per item, price per unit, and the total amount. And obviously, because you're buying this on credit, there are terms and conditions. If it was a cash invoice, it would say COD, cash on delivery. But this is a credit invoice, and the terms here, this invoice must be paid 30 days from the date of the document. So by the 5th of February, this invoice needs to be paid. They could have also put here what would happen if the invoice wasn't paid on date, and I'm sure the computer shop would charge Calibu Education interest on overdue account if they don't pay on time. So there we go. This document is the document that records transactions that are going to appear in which journal are we doing? The Creditors Journal. Okay, so let's move on. Accounting in the clouds, they said. I'm just going to put this document up again, and I'm just going to show you what I mentioned in the previous slide. Can be called a credit invoice, and they're the terms and conditions in a little bit more detail. And once again, the computer shop issued this invoice original to Calibu Education. Calibu Education used the document to record this transaction in the Creditors Journal. This is a completed Creditors Journal. I just want to show you the column headings. There are column headings for document. We're going to write the number of the invoice that we received, the day the transaction took place, who sent us the invoice. It says underneath that writing there, the name of the creditor from whom we're purchasing. Then there's a column for creditors control. Remember, the creditors control account is a general ledger account which summarizes all the individual creditors. So if we had more than one creditor, we just got the computer store. If there was the computer store and there was A, B, C traders, another supplier, if you added those two together, it would equal the balance of the creditors control account in the general ledger. But that is a lesson on its own. For now, we have a column in this journal, creditors control, which is a liability, and we'll see how to treat a liability very shortly. Then there's a column for input VAT. VAT we can claim on standard rated items that we've purchased. If an item has its own column, like trading inventory, the transaction occurs on a regular basis. If it doesn't occur that often, we can put it under sundry. This is a little bit out of the ordinary, that we made 3 purchases of equipment and it's been placed under sundry. We could have had one column for equipment, but let's work with what we got here. And so those are the column headings for a creditor's journal. I like the green of the parsley in the background, and so did my mate, the caterpillar that's going to turn into a butterfly one of these days. So that's the creditor's journal. We're going to go now and take each individual transaction and record the transaction in this journal. I just pointed out here the column headings. Transaction number 1. On the 6th, let's see what it says. On the 6th, purchased stock on credit from the computer store, received a 5% discount because we purchased in bulk and we are a regular customer. So the computer store gave us a small discount. Before the trade discount, the invoice from the computer store was 79,000. Now we need to record this transaction. We received a document from the computer store, that invoice that I showed you earlier. We can put the invoice number of the invoice from the computer store, and in this case it was CS21. That information is normally given in a test. The day is the 6th. From whom did we purchase the stock? From the computer store, the creditor. That C1 is a folio that we obtained from the Creditors Ledger. It's creditor number 1 in our Creditors Ledger. The amount was 79,000 less a 5% discount. Now we can record it by saying 79,000 minus 5%, or what I've done just quickly is I've gone and said 79,000 times by 95%. Your method is up to you. You can practice on your calculator while you're watching this video. Make sure that you get 75,050. Now, stock that we purchased is a standard rated item, so we can claim input VAT. And the way to calculate the input VAT is the amount after the 5% trade discount multiplied by the VAT fraction, 15 over 115. Remember, we're working with a VAT rate of 15% as my example. So in order to calculate the input VAT, we say 75,050. Well, I'll rub this out quickly. 75,050 multiplied by 15 over 115 gives you 9,789 and 13 cents. And to get the VAT exclusive amount, the historical cost price of the trading inventory from this transaction, we can say 75,050 minus the input VAT we just calculated gives you the amount of 65,260 and 87 cents, which is the exclusive amount of the stock, the VAT exclusive amount that we purchased. I also did it like that just to demonstrate. If I want to take off the VAT, I can say 75,050 divided by 1,15, and that will give me the VAT exclusive amount. So that is the transaction on the 6th. There it is. We owe an extra 75,050 to the computer store, a creditor. We can claim input VAT on that amount because stock is standard rated, and then that is the VAT exclusive historical cost price of the trading inventory. Next transaction. Purchased on credit a new printer from the computer store, received their invoice CS78. Very easy. There's the document number CS78. On the 18th, under creditor, who did we receive this printer from? The computer store. It's creditor number 1 in the Creditors Ledger, C1. What amount of money is now owing to the computer store? Another 1350. The input VAT is calculated as 1350, the inclusive amount, times by 15 over 115 is 176.09. And what is the cost price of the equipment? The cost price of the equipment is 1350. There it is, 1350 minus the input VAT of 176.09 and 1173.91 is the cost price of the equipment that we've just purchased on credit. And who likes the green grass? Our Songololos. Lots of nature around here in our classroom. On the 20th, this is the transaction that took place. Purchased 4 tablets on credit from our supplier with whom we have an account, the computer store. 3 were for resale and 1 was for office use. In total, we made a payment. No, we didn't make a payment, not yet, because we bought it on credit. So we owe another 4,400. We record the document number. The transaction took place on the 20th. You must record the document number. If you're doing a test, remember, these entries all could be marks. So do it accurately and well. Right, the creditor was the computer store. The creditor's reference is C1, creditor number 1. We get that information from the creditors ledger. Another 4,400 is owed to our creditors. Now we can claim input VAT on the whole amount because trading inventory is standard rated and the one tablet is going to be used for business equipment. 3 tablets are being used for resale stock, so 3 tablets trading inventory and the 1 tablet is equipment. So to calculate the input VAT, both items, trading inventory and equipment, are standard rated. So we can take the full amount, 4,400 including VAT, multiplied by 15 over 115 gives us 573.91. Now in order to calculate what was the historical cost price of the trading inventory and what was the price of the 1 tablet that's going to be used in the office equipment, we can do the following. We can say 4,400 minus the input VAT amount for all 4 tablets, 573.91, will give me the VAT exclusive amount for 4 tablets, and that amount will be, let me quickly punch it into my calculator and let's see, and I punched it into the calculator and that gives me 3826,09. Now that is for 4 tablets excluding VAT. So if I divide it by 4, I would get the historical cost price of 1 tablet, and if I multiplied it by 3, I would get the trading inventory amount, and because 1 tablet was kept for office use equipment, 3826 divided by 4 equals 956. Now that was a hectic way of calculating that. As you go along, you can develop methods. The more you practice, the better you will get. You could have just done this. And let me explain it. 4,400 was the total inclusive amount for all 4 tablets. Let me show you. There it is, 4,400. So divide by 4, it's 1,100 per tablet. If you got 3 tablets, it is 3,300. 3 tablets were going to be used for stock. And if I want to take the VAT off the 3 tablet amount, 3,300, I just divide by 1,15. So 3,300 divided by 1,15 will give me 2,869 and 57. That is the VAT exclusive amount for the 3 tablets that are going to be used for resale, for stock, trading inventory. Then 1 tablet, 1,100 divided by 1,15 gives me 956 and 52, which is the exclusive amount paid for the tablet, the VAT exclusive amount paid for the tablet, which is going to be used for the office, and we're going to put that under equipment because it's not stock for resale. If that was quite a mouthful, just rewind the video and watch it a few times until you can calculate it. Some things don't just happen straight away. If you're like me, it takes some time. But you will master it if you watch it over and over and if you practice. Next transaction, bought a smart screen from the computer store for presentations. The amount was 10,520 if you're reading that transaction. 2,000 was paid. That was a deposit, but the full amount was not settled straight away. And it's going to be paid off over 3 months. Now the amount that was bought on credit of the smart screen is 10,520 minus the 2,000 deposit, and that gives you 8,520. The input VAT is 8,520 multiplied by the VAT fraction is quadruple 1111 and 30 cents. And then the exclusive amount of the smart screen, the part that was purchased on credit, is 8,520 minus the input VAT, which gives you 7,408 and 70 cents. And that is also going to be classified as equipment. The smart screen bought is equipment for the business. It is part of the equipment for Calibu education. We're doing well. We've done all 4 transactions now that relate to the creditors journal. The 4 transactions where we made a purchase on credit. And guess what? The Songololos didn't catch the cosmos or the cosmoses, and these ones came out. I don't know what the plural is for cosmos. Maybe you can Google it and see. But these beautiful flowers, like you, just popped up. This is what your creditors journal should look like. What I've got here is I've taken out all the little calculations we did in the last few slides, and the journal would look like this. You got the heading, the Creditors Journal of Calibu Education. We were looking at credit purchases for February. The journal folio or the journal reference is CJ1, Creditors Journal 1, and you had columns here for creditors control, input VAT, trading inventory, and sundry. Now the purpose of a journal, remember, is to take the load off the ledger. All this information, if it has its own column, the total will be taken to the general ledger account. So input VAT, the total for the month, will be posted to the general ledger account. Trading inventory, the total. If an item appears under sundry, the information is taken to the ledger on the day the transaction took place. Now it might have been better to have one column for equipment, but I'm going to deal with it as it is. 3 transactions relating to equipment appear under sundry. Now in green here, I've got what we're going to do with these accounts. We're going to credit creditors control. We're going to debit input VAT. we're going to debit trading inventory, and we're going to debit the equipment 3 times. Now the reason we're going to credit, debit, debit, debit is because we need to apply our accounting rules. You need to check out my video on accounting rules. Everything is based on the accounting rules. If you want to be an accurate bookkeeper, you need to know your accounting rules. So we're going to apply these rules. First of all, we're going to classify these accounts according to whether they're assets, income, expense, capital, drawings. These are our categories: assets, drawings, income, capital, expenses, liabilities. And then we're going to see if the asset value has increased, then it will be debited. So we're going to apply our rules in the next step. We're going to take the information from the creditor's journal to the general ledger. I see the tree trunk became shavings, wood shavings. I'm just putting this in here quickly. Before we do the general ledger, I want to show you where the references come from. What I've got here on this page is an extract. This is the trial balance that was drawn up last month on the 31st of January. Remember, we're doing February. Now all these accounts here have folio references. Now equipment, which we will deal with, its folio is B5. So I'm showing you where the folios come from. They come from when we set up these accounts. I'm taking the folios from the previous month's trial balance, and here you got, say for example, staff expenses, it's N11. Input VAT, it's B8. I will show you when we do the general ledger, the references, where they go. So after we've journalized all the transactions and we've drawn up the creditor's journal, it is now time to take this information to the general ledger. What I've done is I've started with the transactions under sundry, and if it appears under sundry, the transaction needs to go to the general ledger on the day the transaction took place. So we're going to post the information to the equipment account. I'm not worried about the first one because that information actually came from the cash book payments, and we in this lesson are doing the creditor's journal. Remember, the left hand side of the general ledger is known as the debit side. The right hand side is known as the credit side. There are column headings for date, details, folio and amount on both sides. Date, details, folio, amount. And I just showed you where you get this reference from. Equipment is balance sheet account number 5, or you might know it as position, financial position, but it used to be called, statement of financial position is the new name for a balance sheet, but my references still refer to equipment as a balance sheet account, so it is B5. Right, let's take the information to the general ledger. This is known as posting to the general ledger from the journal. In this case, the creditor's journal. So 1173 and 91 ends up in the equipment account on the 18th. Under details, the contra account is creditors control, and the amount is 1173.91. There it is, posted to the general ledger. And the same with the 956, and the same with the 7408. Where did the information come from? The creditors journal. What was the contra account? Creditors control. Why did we debit equipment? Now, when we purchased equipment on credit, the value of our equipment in our books increased. What category is equipment? Equipment fits the definition of an asset. When the value of our asset increases, we debit the account. And there's the rule. Equipment is an asset. An increase in the value of an asset must get debited. And this information here came from the sundry column and was posted to the general ledger. Now under details, there's creditors control. Let me quickly show you with T accounts why under details we have creditors control. If I read the transaction and I look at this one here on the 18th, purchased for 1350 equipment. I'm only going to do the connection here. I'm going to leave out the VAT. Equipment was debited because the value of the asset increased. The account that is credited is creditors control. And creditors control is a liability. And when a liability increases, the account gets credited. So the entry would be on the credit side of creditors control. Now the contra account for equipment in this transaction is creditors control. And the name of the contra account appears under details. I'll explain that again when I do the next posting. We've taken the information now which relates to equipment to the general ledger in the previous slide. Now what we need to do is post the information from the columns to the general ledger. If an item has its own column, we take the total to the general ledger. If it appeared under sundry, you needed to take it on the day the transaction took place. The purpose, once again, I have mentioned it, of the journal or a journal is to take the load off the ledger. So let's do creditors control first, and I'll quickly rub this out. So we take the information from the creditors control column to the general ledger, and it says here credit B account. It's actually B12 down there at the bottom. I showed you I took those references of the previous month's trial balance, the folios. Now why do we credit creditors control? Creditors control is a summary of the individual creditors. We only have one, the computer store. It's a liability. When we purchase an item on credit, the liability increases. I'm just going to punch up two rules straight away. We'll do the asset just now, but we're dealing here with a liability. Now creditors control, according to definition, is a liability. When we make a credit purchase, the liabilities have increased by the total of the column. The rule says an increase in liabilities, the account must be credited. The entry goes on the right hand side. Where did we get the information from? The Creditors Journal number 1. There it is. What goes under details? Now we can't go write the contra account of all the items that were affected. For example, trading inventory, input VAT and equipment. So we group them all together and we write sundry purchases. All items purchased on credit. And that appears under details. So let me rub that out and it'll be a bit neater. There's the entry from the total of the creditor's control. On the right hand side, the credit side. Why? Because there's an increase in liabilities. Now let's post the information from the input VAT column and the trading inventory column. Now we know that input VAT is an asset because we can claim back the VAT on standard rated items. Check out my VAT videos. So input VAT is an asset. Because of these purchases, the input VAT has increased. An increase in assets must go on the debit side. So we got the date, 2024, February the 29th, 29 days in 2024. Creditors control is the contra account. It appears under details. Where did we get the information from? Creditors Journal number 1 above. And what was the amount? 11,650. So that total has been posted to the general ledger account. When you practice this, you will become experts very, very quickly. Now there's one more posting that needs to be done, and that is the trading inventory amount from the trading inventory column. So let's have a look at it. Got your trading inventory, and in there it says debit, the B6 account with the total, because it has its own column. There it is, 68,130. Once again, why was it debited? There was an increase in the value of the stock that we held. We purchased the stock on credit. The stock got delivered to us. In our books, we must record it. The value of our stock has increased. Where did we get the information? CJ1. What's the contra account? Creditors control. And there's the date. What I will do in another video, all the transactions in this series, from the cash book receipts, the cash book payments, the petty cash, the debtors journal, all the journals, all the transactions, I will show you in an accounting table. Which account to debit, which account to credit, and the effect on the accounting equation. So you will also, it will help you understand when you read a transaction which accounts are debited and which accounts are credited, which documents were used, which journal was the transaction recorded in. That's an important video. You need to follow my series. They'll be in number, most probably 1 to 40, 1 to 50, when I finish this series on a sole proprietor. Keep going. You guys are doing excellently. It is almost time for a coffee, a nice strong coffee. To summarize this lesson, what we've been doing is we've been looking at credit purchases, invoices were used to record the transactions in the creditors journal. I looked at posting to the general ledger on a monthly basis. I looked at briefly the creditors ledger for the computer store. So we looked at the transactions. Those are examples of transactions. The transactions were documented. We received an invoice from the computer store. These invoices we used to, down there, we used to record the information in the creditors journal. And from the creditors journal, where did we post to? The general ledger. So that's how this fits into the bookkeeping cycle. You guys are doing brilliantly. Keep up the good work. You need to find some exercises wherever you are, and you need to practice. Practice. Once again, thanks so much for purchasing my video. I hope you're learning. I hope you're enjoying the lessons, even all my random pictures that I post, but the accounting is accurate and good. I hope you're enjoying yourselves, and you're going to flower. Just give it some time. You got to keep working at it, and be careful for all these worms that want to eat you up. And that is the end. Keep at it. Persistence is the name of any game. Be consistent.